Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello and welcome out to the Weekend Insights. I'm going to do something a little different this time, change it up just a little bit, and do the market update and the big guys all in one. Trying to experiment and try to figure out sometimes better, smoother, more efficient ways to do this. So just a heads up, this will be just the one recording for this weekend, and then we'll do the little guys in the next day or two. So, but we'll start off like usual. Nice little quote that Zig Ziglar is awesome. He's one of the best, obviously. Getting knocked down in life is a given. Getting up and moving forward is a choice. Because we all get knocked down, right? And sometimes it's better than others, sometimes it's worse than others. And trading, we're constantly feels like we're getting knocked down, right? We don't have any control over the market. We can't make it do what we want to do. It's going to do whatever it wants to, regardless of what we like or don't like. So getting kicked around is just part of the deal. I have to get used to it. The question is, you get up and continue on. So that is the challenge. Not only do we do that in trading, but in just regular life, right? So I get kicked around all the time, and sometimes better than others, but it's not always necessarily fun. But the question is, do we learn from it and move on? So take it and use it. So with that being said, let's get started with all the, make sure the recording's going here. There we go. And economic data coming up this next week. Existing home sales, which obviously may have an effect on that sector. So if you're trading anything in the home sector, beware of that. Housing price index, Michigan Senate. New home sales on the 25th. Was that Wednesday? Looks like all home data this week. I don't see anything else significant. ISM, most of the stuff's not that big of a deal. Of course, what was the Empire Manufacturing Index came out, a week or two ago, showing that corporate profits are in a recession, technically. So that's what's interesting, and why it's sometimes hard to understand why the market would be going up. But on a short-term basis, sometimes it's very different than on a longer-term basis. So the short-term swings sometimes are not unusual, but occasionally they're hard to figure out. So it's got to learn to go with the flow. But we'll see what's coming up with earnings. Pretty much done with earnings season for the most part, but Brocade, not much on Monday. Trina Solar, Tyson Foods. They've been on a tear the last few years, which is interesting how food companies have done so well. And just looking for big names. Dollar Tree. Now they should be, if the data is accurate and we do go into a recession, then typically Dollar Tree type of stores, I know we've said this here many times, but the dollar type of stores, Walmart, the value type of stores usually do relatively well. So let's see, there are a few HPQs, Hewlett Packard, Guess, another clothing. We had some few clothing companies come out last week. Signet Jewelers. I know people. Oh, there's Tiffany's is out on Monday. I know somebody that would like to make their stock go up. Deere. Huh, interesting. It's another one. If you want to get a farm or something, then Deere is one that you'd want to see go up. AMZG. I was thinking that was Amazon. Ann Inc. I believe. I want to say that's Ann Taylor, but I don't know. Covidien. There's an interesting one. I sat on a plane next to a guy about 3 or 4 years ago that worked for Covidien and dry ships. That used to be a big high flyer. He was talking about the company and how they were they were going to get bought out, and he wasn't an insider technically. I mean, he worked for the company, but um, kept saying, "Oh yeah, so and so, we're going to do this," and he kept talking like he knew what was going on, but he really didn't. So it's funny that that was several years ago. So I got to be careful with news or rumors you get from, especially from people that are inside that think they know what they're talking about. I got another friend that he's a good friend, but he talked about let's see anything else. He was talking about something was going to happen with some company he worked for, and there were their earnings reports and this and that, and it's funny their earnings. You know, he worked for the company. It was big. It was a big food company. They weren't even close to what he was thinking they were going to be. It did the exact opposite of what he thought. So, um, but it is what it is. Albertsons, Apollo. Some of these are just names I recognize, not any big names. Family Dollar Store, so another dollar store company. First Solar, there's one that's been on the radar for the last few years because of the big push for solar. Nuance. Yeah, not big names, but ones that have come up. This is interesting because these Kihu, that's been on the radar a little bit. That's been a volatile thing. Are we on Friday? If we are, that's going to work day. That's been on there, seems like the last few weeks. Zep, big chemical company. Interesting. Usually that's a busy day for a Friday. Typically Fridays are slow. Mondays and Fridays are usually slow for earnings, but oh, that's a day after Thanksgiving. That's interesting. No wonder Thursday was. We got Thanksgiving on Thursday. So, there's DirecTV. You can see them. So that's it for earnings. Maybe that's why Friday's so busy. It's the day after, so Thursday there's nothing. There's some coming out, but oops. All right, let's get to the charts real quick. Go through the markets. As you can see, I mean, up a little bit again. Basically, this last week, 2 big up days and 3 little days. So no surprise, a little retracement to the upside. So we're technically still bullish as of right now, but we will see what this week brings. So it'll be a short week, light volume most likely. So we got to prepare for that. Not a great week to necessarily be trading just because of the slowdown. A lot of the big money just takes off for the entire week. They say, well, Thanksgiving's on Thursday. Let's just take the whole week off. And actually, typically, it's usually we get bullish moves on these type of weeks because there's low volume, and it's all the rookies taking over. So, and they're always naturally bullish. I know that's the theory, at least. Seems to hold true most of the time, but not always. So, transports, as you can see, still, I mean, yeah, kind of technically bullish, but more neutral than anything. Pretty much sideways. Tried to break out Friday above that short-term high that we've been bumping up against, and maybe, I mean, you could say it barely got through it, but not enough really to call it a breakout. So a little bit of a shooting star there. So would actually expect a pullback on Monday, but we'll see. If it takes off and rallies to the upside, then we'll have to turn bullish on it. So Russell, very similar as the transports as we've been watching. Those two indexes kind of go the opposite of the other ones, but they're kind of sort of catching up right now. They're trying to, it looks like. Whether or not they do remains to be seen. So, and then the VIX, no surprise, dropping back off a little bit. So with that, let's get to the big guys. And only about 15 this week, a little lighter than most of the time. We were pushing upwards of 20 last week, which usually we got between 20 and 30, but the last several weeks it's been a little slower than normal. So market's getting back into that sideways choppy thing we had back in the summertime, which summertime is typically like that anyway. But we're kind of back in that mode of just dancing along. So it's making it, in my opinion, it's more difficult to trade. So, but with that, looking at Aflac, I won't do it, I promise. Looking at pushing up near all-time highs on this. Actually broken out to all-time highs, but we'd slowed down the last couple days, so a little tiny shooting star there. We needed to pull back. In fact, that's almost what I would like to see. And on a week like this, I wouldn't be surprised to see it pull back If it holds that 64.70, that 65 level, that's when it would be good. So could be late in the week, even early next week before this materializes. Hard to say. So we'll see. Ambarella, I thought this was on the radar last week. Why do we have two? Not sure where this came from. And you can see this thing just has gotten destroyed. Believe this is a healthcare company, and they've come out recently with the Obamacare thing. You know, it's really lit a fire on a lot of these healthcares. And this is one that, I mean, we were 130, and well, what's that? 2 months. We peaked out, double top there back in July, end of July, and we basically bottomed out here at the end of October. So 3 or 4 months, we went from 130 to 50. About 65, 70% drop. Huge. And we've got a nice little double bottom, built a little base. We've broken out of the midpoint just barely on Friday, but we had pretty solid volume, so that's a good sign. Earnings is coming up, though, on the 3rd, so we've got only a couple weeks till that hits. But this thing very well could, if people get excited and think earnings are going to be spectacular, it could run into earnings, which is really kind of what we're looking for here. In fact, it would be easy to move that target from 64.30 up quite a bit because there's lots of room there. That's a very small range, even though it's not. I mean, it's still $6.5, $7. It looks small, but it's about a 10% move. So, crazy thing is I like the looks of this because it's got some pretty serious potential if it comes out. This is one of those that we could possibly, if we get on it this week and it starts to run, you could take out part of the position and leave a small piece and hold it over earnings. If you can get back to break even or you get slightly profitable, and you can hang on to one and see if you can get a home run, it's a pretty sweet deal. I was playing with that. It's really hard to get those, so I've kind of given up on that, turning that into I don't know if they call it a strategy or not, but just kind of a tweak on playing the earnings. You could call it I don't know, tweak chicken trade. It's an offshoot, or it's a way to tweak the chicken trade and try to make it better. It's not really even a chicken trade though at that point, but so we'll see what happens with Ambarella. It looks good. I like the looks of it right now, so we'll see what the action looks like tomorrow. Amtech, not terribly excited about this one. Being up at a peak and slowing down the last couple days, little spinning tops here at that resistance level. So if it drops from here, pretty decent chance we'll get back to 54. It's done it 3 times in the last month and a half. So we got a couple bucks of potential there without a whole ton of risk. So typically I like breakouts, but if the opportunity is there, we'll at least keep an eye on it and see what happens. So Anadarko, this one, like so many other oils, has gotten trashed. Look at that head and shoulders. Now this is a weekly chart, so a little bit of a downsloping neckline. But here's the interesting part. I'm just curious to see now what the measured move is. It's a little bit short, but that's okay. It's probably 37, but that's not that big of a deal. I'm just trying to get a ballpark range and see what it looks like. Oops. Oh, well, what do you know? See if that was a little closer. Well, probably another buck, but there's the interesting part is if that weekly head and shoulders plays out, this thing's probably going to 32. In fact, that makes a good point. This may not be a bad long-term bearish trade. You get a leap out a couple years, you go out and pick up the 35s or something. I don't know what they're going for, but I know I've also said I want to do some of that, is get that in. And even though my internet's working here, it's not that spectacular. So, but I can just talk generically about it. As far as this is the long-term picture. The long-term picture, there's a huge, that's about as textbook a head and shoulders as you get. Now we're looking at about a 37-point move from 70, so we're looking at about 32, 33, somewhere in there. Stock's at 59, basically, so if you went out, well, let's see, it's almost January, you could maybe go out to January of 17. That's a little over a year. That gives you about 6 months. I maybe even go out to January of 18, if they're available. I think Anadarko's traded enough that there's probably some leaps on it. So if they've written leaps, they got to write both sides. So even, look at the 40s. I mean, those are almost 20 points out of the money. even for 2 years, I'd imagine they'd be $3 to $5, maybe $6. And if it goes to 35, if you buy the 40s and it goes to 35 in the next year, you're at least, if you pay $6 for them, you're going to have at least a break even. You'll probably have $8 to $10 in there you could sell them for. So I know it's not as exciting because you're talking about a length of time to hold on to something, but um, you're also talking about a 25, 30 point drop that could produce a sizable profit. So in the short term, though, which is what the main thing this came up with, we're testing these bottoms again. We've got that little morning star back here that produced a rally, but then it's dropped back off. Big acceleration. Look at the big volume we've had in the last couple of weeks. That big drop from 70 all the way to 60, basically 58.5, and then a little bounce. And Friday it held on. It's staying above that 58.50 level, that support. But if it breaks below it, the odds of it dropping are pretty high, down to the next level, which is about 53. So I love the looks of Anadarko right now if it breaks to the downside. Baker Hughes, another oil and gas. It's actually holding. Not sure where these duplicates are coming from. Must have had them on there and just didn't see them. You see this is the trend since '09. It's not a real stellar one. We've only got 3 hits. So we had confirmation. And essentially right now, getting back to this, I guess we had a little more on a weekly chart. We've only got 1, 2, 3 spots. Daily looks like a little more confirmation here. So, and then we cracked through it here when we tanked a couple of months ago. And we're testing it again. We've tested it again. So looking at a potential for a bullish run here. And this is the interesting part. You got Anadarko and then you got Baker. Both of them looking one bullish, one bearish. So not necessarily a bad thing to have, because if you pick up one and things go bullish, if the oil markets get bullish, then Baker takes off and runs, and Anadarko may go against you. Well, if you take a buck hit on Anadarko because it goes bullish and stops you out, but then you make $3 on Baker Hughes, are you okay? Yeah. So good idea to, not a bad idea, I should say. I don't know if I'd say it's a good idea. It's not a bad idea, though, to have 2 stocks in the same sector looking at the opposite sides of them. So, and maybe this one hit. Maybe Baker Hughes hits and Anadarko doesn't even trigger an entry point. That could be the case. And that's the beauty of it sometimes. Sometimes you'll have the whole sector moves in one direction, so it sucks them with it, and you only get on the one that it's going with. So hopefully that makes sense. Cardinal Health, I don't know what is going on and why I have all these duplications on here. No idea what's going on. One of the orange ones, for some reason, were missing. I don't know what the deal is with that. It's weird. I've never had that happen. Anyway, so Cardinal Health, we've got a little double top going on. Almost, not quite a dark cloud cover on Thursday, a little spinning top on Friday. So we'll see what this one brings. Another one that, just like, I think it was, what was it, Amtech? Not terribly excited. It's not a breakout. It's just a resistance. We've got a double top forming here. So we'll see what happens with Cardinal, though. Coke, bearish engulfing pattern after a sideways move for the last 6 or 7 weeks. Looking for it to break down below that minor support, basically kind of break out of this rectangle. We essentially have, and I didn't draw it there. A lot of times we see things and just don't draw it, but you got this nice little rectangle, and if we go here, which we haven't done yet, you can also see there's lots going on. You've got the bands pinching big time. They're starting to just slightly turn to the downside, at least that lower band is. You've got the 50-day moving average sitting right there along that coincides with that support level. You've got MACD and Stokes both pointing to the downside, looking more bearish, like this thing wants to break to the downside. So a move to the downside would make it highly probable, in my opinion, that it would continue at least for a time. You're looking at about 48 for a target. So this could be a real good one. We'll see. And it could, I mean, if it blasts right through that, that'd be even better, right? Eaton Industrial Machinery, and you see Cat and Cummins have all been just trashed in the last few months. They have at least I think Cat and CMI, I haven't looked at them for a couple of weeks, but they've both bounced. They haven't shown up on the radar, but they've bounced back a little bit. Eaton's doing that now. We got a nice little uptrend in the short term. It's a little bit above the entry point right now. And I would rather see this thing pull back. We've got, last week it moved up from what, 54 to 58 almost. So it's had a big enough run where a sideways move or a pullback would be healthy, and it would be basically best for it at this point. Insight, bearish engulfing pattern, but notice we've also got basically kind of a diamond pattern going, which is rare. We don't see it very often, but it's there. Right? And if you're not familiar with the diamond, you should be familiar with the diamond. You should all have been through patterns of flash, right? And then there's this. So it's essentially a broadening pattern followed up by a symmetrical triangle. It creates kind of a diamond. That is just like the broadening pattern. It is typically a topping pattern. So you get the diamond, and it basically means the same thing. So we're looking at a high likelihood of a top on Insight. And we've got lots of different signs saying that that's the case. We've got the big bearish engulfing pattern on Friday after the tiny little harami on Thursday. But would have been nice to see big volume. But we definitely have, you can see in the last 2 or 3 months, we've had some big moves to the downside with giant volume. I think this is earnings right here a couple weeks ago, but not sure because they take those earnings bubbles away. So, but if this continues to the downside, breaks below that 110, 109.50 area, probably just like the other times, it got serious momentum and this thing just crashes right through it. So there's a decent likelihood this will be one that you'll have to catch as it's falling, and hopefully it works out. I mean, there's about $10 of potential there. So Kimberly Clark, KMB, huge bearish engulfing pattern, and this is about as textbook as it gets. Go back and look at the long-term picture. See, even going to monthly, this thing's been around since the 70s. There's a long-term picture, and now we've got the big bearish engulfing pattern that is just textbook. It's right at a high. We had a previous consolidation 3 or 4 weeks ago. We gap up, make an all-time high, and then sell off from there. We sell off with pretty sizable volume. We went from 1.5 to 2.6. So was it 600,000? That's almost a 50% increase in volume. So that is spectacular. The only challenge it makes for trading is that it's dropped enough on Friday that it's already through our entry point. So from a risk-reward perspective, hard to trade from this point. Could we adjust it? We come over here and look at this and say, and I'm going to throw this out there. I'm not going to plot it, but could you take it and say I'm going to use the 20-day as a stop out point and move the red line, the stop point, just above the 20-day moving average, and then adjust your trading plan accordingly? Absolutely. No reason you couldn't do something like that. I'm going to leave it because I'm at a point where if I miss it, I miss it. I don't care. I can't say I don't care because I'd be a little bit cranky, but at the same time, it is what it is. I miss trades all the time. Mead Johnson, moving on to these guys. Nice little consolidation after pop-ups and dancing on that 82.72 area. A little bearish engulfing pattern. That's the pattern that showed up, plus the consolidation. And you can see the bands are pinching. So if this thing starts to make a move, it's probably going to be big. It's wound up pretty tight so far, and if it breaks, it should break pretty solid. Pepsi, interesting. I just realized that we've got Coke and Pepsi on here this week. What are the odds of that? I'm going to have a war between the two. I have a taste test. Have a taste challenge. Bearish engulfing pattern. Quite a few of those showing up this week. And here's just another one. Not as pretty as some of the others, but this is better than, there was one of those the early on that we had that wasn't that great. At least we've got a slight increase in volume and a pretty solid engulfing. It's not a tiny little gap up. It actually gapped up pretty solid and engulfed it pretty good. This one still has a possibility of dropping below that 100. We're sitting right at the $100 level. So if it breaks below that, there's a decent chance it will continue, and that's really what I like about it because it's at that round number. Indicators are kind of mixed, but I think with the pattern itself and the round number and a breakdown below that, we have a pretty decent opportunity here. So Procter & Gamble, another bearish engulfing, right at a resistance. Looks very similar, right? We've got a consolidation a few weeks ago. Then the last 2 weeks, we've danced around pretty solid. Rallied back up to that 76 area, 76.40. Tried to stay above it, but the last 2 days we failed. And a little increase, tiny little increase on volume, but for that bearish engulfing pattern. But I like the looks of this one too. Splunk, another bearish engulfing. This is a huge one, right? Look at long term. This company's not been public that long. We're talking 2011, 2012, April of 12. I believe this is a software company. I'm pretty sure. But obviously they got pretty bullish until Friday. Well, they came out with earnings and then gapped up Friday morning, rallied all the way up to 67, dropped off and tanked and hit 60.54. And obviously, huge increase in volume. I mean, we got 2 million to 7.4. Huge 3.5, 4, almost 4 times the volume, all based on earnings. But that big bearish engulfing pattern definitely created some momentum. So we'll see what it brings in the next few days. Probably Monday. If it starts to move to the downside on Monday, then I'd definitely be interested. Sometimes you get big bearish engulfing. Things that are so big like this, they're overdone. So we got to keep that in the back of our heads as well, is that maybe they sold it off too hard and it'll bounce on Monday or Tuesday. So we'll see. That's the funny thing. We never know. I'd love to sit here and tell you this is what's going to happen based on the pattern. We don't know. I mean, sometimes that's what happens. It's a 50-50 shot. So, and finishing it off with, this is one I believe is a rollover. There's a couple on here. I believe this has been on the radar the last few weeks. Sempra Energy Utilities. And it's been in a pretty solid downtrend for almost a year. And tried to break out 2 or 3 weeks ago. I remember looking at this, and then it broke out, so it came off the radar. Well, now it's back on because it was sitting right there, a nice little spinning top with some pretty decent volume, especially relative to the last couple weeks. But pretty solid volume at that resistance level. So if it drops off from here, there's a pretty decent chance we're going to head down. And that's what it's done. You look at the longer term picture, every time it gets up to this area, from the trend line perspective, there it is. And there's the other part. I knew there's a few of these here. We've got the 200-day moving average that it has been for the last month trying to get above, and it did get above it for 3 days, basically. Closed above it, 3 days. The third day, it dropped off, and then the following day, as you can see right back here, it dropped back below it. It's just been below there for two weeks, and it's tried. This is the 4th day. Friday was the 4th day. It tried to get above that 200, and it failed. So indicators show a little bullishness, or at least Stokes does. MACD is basically flat, but it's we'll see what this brings. I mean, I kind of like it, even though it's not necessarily a breakout. But there's the beauty of this. It could be one that we need to flip over. That if it breaks out to the upside, if that's what it does this next week, then we might need to look at a potential bullish move on this thing. So we will see. So that is it for the market update and the big guys for this week so far. And if you have any feedback on whether you like them both or you like them separate, then feel free to email it to me. I'd be happy to hear what you have to say. So with that being said, I'm going to sign off for now, and we'll see you in the next day or two. Y'all take care. Have a great weekend. Bye-bye.